Hey friends, it's Karen Hernandez, your trusted real estate agent. I am visiting my friend Eddie from H Mortgage. Eddie is gonna walk us through the loan process, everything that takes from beginning to end. So Eddie, tell us more about the loan process. What does it look like?
Thank you for visiting with me today. The loan process, as Karen mentioned, can for some seem a bit stressful. Getting feedback from previous clients and people that have worked with other lenders in the past and then migrated or came to me for their next transaction. Some of the feedback I hear is that, Eddie, something that was very stressful my first time around was that the loan officer I worked with or lender I was working with just kept asking for more documentation. I would send them everything, and just when I thought I had completed all the steps, they would come back and ask for something more. So what I have found that will, in many cases, streamline the process is preparedness and asking and answering all the right questions and making sure that you're dealing with a mortgage broker who takes the time to really map out the process step by step for you. So that's what I'm going to do for you today. Usually the first step in getting approved or qualified for a mortgage is filling out your application, making sure if there are any questions on the application that you're not clear on or understand, that you give your mortgage broker a call. A lot of times I can walk you through that application step by step. We all have an online application that you can fill out on your phone or mobile device, a computer, laptop, etc. Do at your leisure.
Okay.
If at any time there's a question that you don't fully understand, I always recommend that you give me a call and we get clarification, because again, sometimes the biggest hiccup can be caused by a misunderstanding or maybe something that wasn't clarified in the initial application that later came to light.
Right.
Which can result in that having to backtrack and go back and rectify or fix something that was not initially clarified.
Correct.
And there are the documents that would accompany that application. Summarize that in kind of an acronym that I've made up, which is ICA, or I see a way to get you into your new home. The I stands for income, the C stands for credit,
Okay.
and the A stands for assets. Those are pillars of qualifying for a mortgage. Income consists of your 2 most recent years' W-2 forms or tax returns, depending on whether or not you're a W-2 wage earner or self-employed. Your 2 most recent paycheck stubs. I also like to ask for the year-end pay stubs for the 2 previous years. If I'm able to get that, it helps me skip an additional step of having to get a verification of employment. Okay. People often ask, if you have the W-2s, why do you also need the year-end pay stubs? Good question. The W-2s are going to tell me your gross earnings, whereas your pay stubs are going to itemize and break down those earnings.
Everything.
Different types of variable pay, that would consist of bonuses, overtime, commission. In order to use variable pay, in most cases, we have to take an average. A lot of times it's going to be a 2-year average. Lenders would ask for a verification of employment. If I get these pay stubs for the entire year, that's going to get me all that information that would be required on the verification of employment. So that'll skip an additional step of having to wait on an employer. Some lenders are still going to require that VOE. However, my having that information gets us quicker to the answer that you're looking for, which is, am I approved? How much am I approved for? What's my interest rate, my payment, etc. If you have access to the year-end pay stubs for each of those 2 previous years, that would be helpful. If not, we would get a name, phone number, and email address for your employer to verify employment. The C is credit, reviewing your credit history, looking at your credit scores, your liabilities. We use that to balance out with the income to determine your debt to income ratio. And then the A is assets. That's your down payment money, your cash to close. The assets is generally going to be your most recent 2 months account statements for whichever account your down payment would be coming from.
Okay.
And that's pretty much it. Now, a good mortgage broker is going to take their time to review everything, see if there's any holes that need to be filled or I's that need to be dotted, T's that need to be crossed. In other words, let's say on the application, we're typically going to need a 2-year employment history. Sometimes people will just put down their current employer that they started at 6 months ago. If I'm missing 2 years, the underwriter's going to say, hey, where's my 2 years? You'd be surprised. Some mortgage brokers are going to send out an approval letter without even having filled in the blanks, and that can result in a very stressful process because they sent out an approval that may not be accurate. Right? So I'm going to review the application, review the income, make sure that if there's any questions, we get those answers. The faster you get it to me, the faster I'm going to get an answer for you. And generally, that answer would come within 24 to 48 business hours of my receiving it. So it's pretty quick. Assuming there's no questions left unanswered, I would be calling you back with either, hey, you're approved, and here is what a scenario would look like. Let's go shopping for a home. Or B, we've got a little work to do, and here's a roadmap on how we can get you there.
Okay. You mentioned the 2-year and check stubs. I had never heard that before. Thank you for sharing that. I didn't know that was used for that purpose.
That's why I mentioned it. A lot of my counterparts out there, my competitors, don't ask for it. I guess I'm kind of giving up a sort of a trade secret, but use it. That can really help streamline the process. Mortgage brokers, we wear many hats, more now that I'm bald, but our job as mortgage brokers is to answer questions before they come out. And that goes for the realtors that we work with, our clients, our buyers or borrowers, and most importantly, underwriters. If I see something, I'm going to try to see it through the eyes of an underwriter and say, what could this underwriter possibly ask about? I'm going to get those answers before they think of it. The better I am at my job and doing that, guess what? If I'm constantly working with the same underwriters, they start to get a feel for, oh, this is Edward Foy's file. I already know his files are clean, so it makes for a much more streamlined process. Don't take my word for it. Check our reviews, Google Edward Foy Mortgage, and see what other people have to say. And that's what I always recommend that you do, regardless of whether you're working with me or anyone, that you do your homework. Is this someone that I can trust with possibly the largest investment I'm going to make in my life?
Correct. Between the 1099 and W-2s, there has been instances they go from one to the other. Can you use both? Can you combine a 1099 and a W-2, or it has to be 2 years 1099 or 2 years W-2?
That's going to depend. You've got people who have a full-time job that's W-2 and they have a side job that is making as much or more money than their primary W-2 employer. I'm always going to ask for it because we never want to assume anything and possibly miss a money-saving opportunity, right? It's going to depend upon how you are claiming that 1099 or self-employment income. A lot of our self-employed individuals are take advantage of potential tax write-offs or deductions that are available to them, as they should. That may minimize their net income that is being claimed from that business. Let's say that I'm a hairdresser and I gross $100,000 a year doing hair. I don't spend all that much on hair these days, but I know from my wife, and I've heard some of the prices that y'all pay to get your hair done. I envy some of the income that I see y'all getting, but there comes cost with running a business. To keep that hairdressing business successful, they might gross $100,000, $200,000, but after all their expenses, they may only be netting $50,000 to $75,000. So it's going to depend what that net figure looks like to determine if we're going to use it. After reviewing it, I will go over that information to determine, because let's say you're looking for a $300,000 or $400,000 home and we don't need the additional income, then maybe you don't want to have to go through the trouble of getting all the tax returns and all of that, or vice versa. Maybe you want to qualify for more and you say, hey, I do have this additional income. Would this help me? We're going to analyze each individual scenario to determine what is best for you as a buyer. And the sooner we get that reviewed, it can also help you maneuver the future for self-employed borrowers out there. We're mid-September now. So some of y'all filed a tax extension. You probably are having just filed your business returns. And depending on how your business is structured, you probably don't have to file your personal returns until October 15th. If we have that discussion now, maybe it's going to change how you structure those returns and possibly provide you with more leverage or benefit in getting approved.
Right. I've run into that a lot where business owners are trying to buy a house, but when filing their taxes, made $150,000, but after deducting all their expenses, they only end up with $40,000 in their pocket. Like you said, that is so that they don't have to pay so much income tax. But what can $40,000 get them?
It can be a challenge. And that's why it's so very important to have these conversations, because you want to make sure that you're doing what's best, not only for today, but for the future. Maybe we cut back on some of the deductions for a year or two, which, yeah, it's going to result in a little bit more income tax being paid, but a lot less rent being paid. And then you can start building equity. And after handle your business and deductions as you best see fit for the business. But knowing what is needed is so key, because a lot of people just don't know.
They don't.
You'd be surprised at how many business owners I've talked to. What are you talking about? I don't qualify. I made $500,000 last year. Well, not according to your tax returns. Yes, you grossed $500,000. You claim profit of $100,000. We can't tell Uncle Sam one thing and then the lender another. Now, do have non-QM or outside the box products, which will allow more non-traditional ways of qualifying for self-employed individuals. Just understand that that's also going to come with a premium, because if we're not using what's called full doc qualifying, which is your actual tax returns or W-2s, if we use a non-traditional method of, let's say, bank statements or a P&L statement from your tax preparer, these different ways can work and help you get approved for something that you might not otherwise get approved for. But because they are offering those outside the box alternatives, your interest rate might be a little bit higher and your down payment might be a little bit more. Now, those different options should always be looked at, because it may be better than waiting. It may be better than the ramifications that you would have to face with the change in income taxes. So know your options, have a discussion, then you can better map out what you feel is the best option for you. Sometimes that timing could be everything. A bank statement loan for a repeat, it worked out great. They decided we'll go the bank statement route because we found this great opportunity. After a year or two, if we can have everything ready, we can go refinance. They were able to lock in the deal right away, so it wasn't missed.
Well, that's good. That's good to hear. I know that it can be challenging, especially for 1099 or self-employed. Going back to the 1099s, just to clarify, if they were W-2 and then they switched to a 1099, then they have to wait 2 years, right?
That depends. If recently changed from W-2 and now you are 1099, if there's a history in that field, there may be options to where we don't have to wait. Every situation is going to vary. If we want to go the traditional route, we will need tax returns showing what that net profit is after all write-offs and deductions. But depending on the history, depending on what you did most recently in your W-2 field, you may not have to wait 2 years. Generally speaking, if you have been self-employed, most lenders are going to want to see a 2-year history in at least the field in which you are self-employed, and typically 2 years of doing business as self-employed. But there are options where if there is an established history in that field, where you may not have to wait.
I get that question a lot.
While we're on that topic, when it comes to W-2, we hear that what's typically needed to qualify for a mortgage, and a lot of people just kind of run with that and don't realize that there are gray areas. Let's say, for example, that you just got into the workforce, right? You just graduated college and you've got an offer letter at Baylor Medicine. You're going to be a nurse. You haven't even started your job yet, but you have your offer letter. It's signed, sealed, delivered. You're going to start your job, and we already see this is going to be your salary. There's no conditions on that work letter. I can use that immediately. If you're a W-2 wage earner and it's got your salary there, it's got your start date, and there's no conditions, you're not waiting on any background checks or anything, you start on that day, then I'm good to go. I can use that income immediately.
Okay.
And some people are like, wow, I thought I had to have a 2-year work history. Remember what I said before that? You just graduated college, so I can use your college transcripts to cover the gap in the 2 years.
That's a lot of information that is not out there for our college graduates. And
Right.
not a lot of them know about it.
Right.
So they can use the 2 years or however many years they've been going to school. If they
But
have,
wait, there's
if they-
more.
Okay,
It doesn't
good.
even necessarily have to be college. So yeah, you could
Trade
have been
school?
a trade school. You could have
Okay.
been at any type of training that's documented that has some sort of transcript.
Okay.
I can use that. Let's say that you were self-employed and maybe you had a business on the side and it never really made all that much money, but you were consistently working at it. Some people think, well, no, that's not going to help me because I didn't make any money off of that. But remember, I'm not using it as your income. I'm using it as your work history.
Okay.
So some people think, well, I just started my W-2 job and I was running my cupcake business for 2 years, but I didn't really make any money. Well, did you file tax returns? Did you have any type of documentation that proves you were in business? Because if you do, then I can use that to fill in your 2-year work history. It can be college transcripts, previous self-employment. And remember, because it's simply filling in work history, we're not using that for income. We're using it to document work history. Even if you did not claim all that much income, if I can document that it existed, or if I can document that you were in school or taking any type of training that can be documented, that can count as work history. In the case where I was just using it for work history, then that income is insignificant because your income only helps you if it's still incoming, right? So the only income that really matters from a qualifying standpoint is your current income. Now, as I said earlier, when we were talking about the year-end pay stubs, when we get into variable income, like overtime, commissions, bonuses, that can transfer from one employer to another because now we're trying to establish an average or a consistency. Let's say that in the example, we'll go back to Baylor again. I promise I don't get paid by Baylor. Let's say that I'm a nurse at Baylor, but I previously worked for Memorial Hermann, right? So I work a whole lot of overtime, but I've only been at Baylor for a month. So how do I establish an average or a consistency of my overtime? Well, if in your 2-year history, let's say you made overtime pay consistently at your previous employer, maybe you had multiple employers, 2 or 3 in the last 2 years.
Right.
If I can show that consistency, then I can use your current overtime and average it.
Okay.
That makes sense. That can be crucial in many situations, especially when we talk about nurses and police officers, many different professions where you're making a whole lot of overtime. A lot of people in oil and gas making way more money in overtime than their base pay. If we can't use that, that's really hampering your buying power. So I'm going to make sure we establish that history. That's why I ask for the information that I do, so I can quickly do those calculations and say, okay, here's how we can use this income. Flight attendants, another profession, they get paid 6 different types of ways. If you're not dealing with somebody who has experience with those professions, they might tell you this isn't going to work. We don't have enough income, but that's only because they don't know what to look for. Make sure that you're dealing with somebody that can really analyze that and do those averages for you so you don't miss out on an opportunity or get misinformation and possibly get some information that's just not correct. And you're thinking you don't qualify, you're thinking you can't get the home that you want, and really you can, you just didn't have the right set of eyes on it.
There's a lot of information out there that may not be correct. That's why they have that understanding or that belief that they don't qualify for the loan because of all the information that is out there. My clients, when I talk to them, they're like, I don't think we will qualify. We make very little money. And I take them to the lender and I let them review assets, their income and all of that. They come to find out that, they do qualify.
Right.
So yes, talk to someone who knows what they're doing so that you are not, running around in circles.
Great point. Social media can be fantastic. The internet, glorious. Unfortunately, as things have kind of progressed over the years, it has kind of hampered a lot of us intellectually, we've become lazy. You
Oh,
would
yeah.
think with all the information we have access to through our smartphones and the internet in general, we would take a moment to research things, but the algorithm
Oh, yes.
caters to whatever it is you like to see, and they just feed you more of that.
More and more.
And unfortunately, people just don't take a second to say, okay, maybe I should Google this. I come from an era of the encyclopedia books,
Oh, yes.
where we had to literally go to a library, look up who remembers the microfiche.
Yes.
We had to do research and find things that was literal labor. Now
Yes.
you don't even have to type it in your phone. You can ask your phone to look it up for you, and it boggles my mind that people just don't take a literal second or two
Just to verify the information.
to do your research, do your Googles, or let's have an old-timey conversation and give me a call and we could sort things out, because I
totally agree with that.
It really sucks to see people miss out on opportunities because they just didn't take a minute to talk to someone who might be able to kind of shed light on what is currently available. Not everybody is going to be ready in this moment, but hopefully the right person. I can't recall telling somebody flat out that I can't help them. I'm usually, if I can't get you approved today, I'm going to leave you with a guide of some sort. I'm going to let you know why it won't work right now and provide a pathway of here's how this could work. I would want to know. If I'm in that position, I want to know. So I would imagine most people would as well. Once you've thought, I want to purchase a home, I want to own a home, that's where you initiate that conversation with the mortgage broker. Don't wait until everything's right. That's never going to happen. Not to mention, if you skip that first step in talking to a professional, you might waste months or years of time preparing the wrong things or missing a key piece that, had you had a 10 or 15 minute discussion initially, would have been part of the plan. I see it all the time. I'm saving for a down payment, or I'm waiting for my credit score to go up, but they miss two or three vital pillars in getting approved, or they miss what happened last 3 years with property values.
Right.
Because life goes on, right? And you can ask my wife. I've got a list of things that I'm supposed to do around the house or what have you, the honey-do list. Some of those things have been on the list for years. I'm sorry. I told you I was going to do it. You don't have to ask me every 3 months. I think we all have that list. We might call it something different, but we all have a list of things we're going to get to. Unfortunately, a lot of future homeowners have been wanting to be homeowners for decades now. They've been working on their credit for 4 or 5 years, and they really could have purchased 4 or 5 years ago, but they want to have an 800 credit score. Well, 4 or 5 years ago, your home may have cost $100,000 less. So make sure that it's going to be worth it. Whatever it is you're planning for, waiting rarely gets you results. You make sure you have an action plan. Just sitting around waiting is rarely going to bear fruit. Whatever it is you're working on, make sure that the work is worth the prize. And a lot of times to figure that out would take having a conversation with Karen or myself that are doing this every day and are going to show you the pros and cons of working on certain things and maybe executing immediately while we work on certain things, so you can get the most bang for your buck.
Yes, I totally agree with that. When the client comes to me first, I ask a couple of qualifying questions, but at the end, I always transfer them to who knows best about loans. I don't do loans.
That's interesting that you bring that up, the kind of realtor, mortgage broker, lender relationship, because we try to do our best to stay in our lane. Certain things that will kind of overlap and cross paths. And that's why communication is key and a great advantage in working with individuals that have a working relationship or have experienced work together. A good example of this is seller concessions. I'll post a link in the description where we kind of dive more into the benefits of seller concessions as opposed to reducing a purchase price. A lot of people will gravitate to wanting a lower price on the home naturally because, of course, I'm going to pay less. What a lot of people don't understand is that if you are getting a loan, if you're financing that purchase, the lower purchase price is never a better option than getting seller concessions.
I mean, if they get both, then
Yeah, now if you get both, that
right?
can be great. But I always recommend that you max out your seller concessions before reducing the purchase price. And you'd be amazed at how many times I've had to explain that to some realtors. Send fee sheets side by side.
Okay.
And show them
The difference.
Look, this is the reduction of the sales price by $5,000. This is their bottom line, how much money they're going to have to bring to the table. And this is keeping the purchase price the same, getting $5,000 in concessions. Guess what? The bottom line with that option, the seller concession, is going to be almost $5,000 less cash to close. How? Well, because you're going to have some upfront fees. You're also going to have interest on your mortgage. So by getting the cash at the table, as opposed to financed over 360 payments or 180 payments, that's 15 versus 30 years, makes a huge difference.
It does.
And sometimes when you don't have people that have worked together, egos get involved. I'm the realtor, I'm the mortgage lender, don't step on my toes. And I'm never trying to do that.
No.
My job is if somebody has 15 or 20 grand or whatever the money is that they have available, well, I need to mention this might stretch your dollar a little bit more, right?
And they like that.
But I don't write the contract. So I also have to communicate that to the agent. Now, it's up to you how you want to handle it.
Right.
If you've seen the math and you see those fee sheets side by side and you prefer a lower purchase price, it's not my money.
Go with that.
Yeah. My job is to let you know about it.
Right.
And then you do what you're most comfortable with, right? I just wanted to mention that because that's also key. As a buyer navigating the real estate market, make sure that you're dealing with a professional that is experienced and is going to have your best interest at heart. That may not always be a team, right? You may not always have a realtor and a mortgage broker that have worked together, but if you find the right people that are experienced, then they're going to hopefully approach everything with an open mind and more importantly, probably already know these things.
Oh, yeah.
But yes, if you're able to find a team that has that cohesion, that can also be a great benefit.
I tried explaining it to my clients. It'll be in your best interest instead of lower the price, get more money for closing costs. And
as much as you may have researched someone, no matter how many hundreds of Google reviews, we have a lot of money being invested. And I understand when you first hear that, it might sound like some kind of voodoo or trickery. Like, is he trying to somehow trick me into spending more money? He wants me to have the higher sales price because his commission is based off of, that's why I follow up with the fee sheet. And again, I've done videos explaining this and showing illustrations, but I'm happy to send the fee sheets because I get it. I understand. If it was my first time hearing it, I would think it was crazy too, but that's the math of it.
You'll be doubting it.
That's why it's important that you're dealing with people that are going to explain these things, not only just say it, but walk you through it, because I want to make sure that not only are you comfortable at the time of the transaction, but years down the line, I want you to be able to look back at the transaction and say,
have no regrets.
Yeah, I made a great decision working with Karen and working with Eddie. They did take the time to walk me through these things. I did understand them, and I feel like I made the best decision based on that information.
Oh, yeah.
Unfortunately, in this internet, TikTok, Instagram age, there are still a lot of people out there, still a lot of real estate agents and a lot of mortgage brokers who are looking for a quick buck. They close this loan today and they're on to the next one. I've been doing this now over 21 years, and I've learned that it's not about one or two transactions. It's about building a relationship and trust, because I want you to be happy. So you share that information and experience with your friends, your family, your coworkers. And next time you think about buying or selling a home or refinancing, you call Eddie and Karen to bounce ideas off of us and help us on our next transaction.
That's very important.
That's going to come through that trust and guidance and help.
At the end, that's what it comes down to. That's how we get most of our business. And we only achieve that by earning your trust. And how can we earn your trust? Well, by doing this, educating you, by sharing things that you might have seen on social media and you got the wrong information, but here we are, sharing the correct information.
Any craft that you're attempting to master, constantly learning. We should be constantly learning and evolving, especially in our industry. There are constant changes, and that's why it's important to deal with people that are keeping their thumb on the pulse of what's going on and not just giving you what you ask for, but also showing you. Sometimes you might approach a situation with an idea. I can't tell you how many times I've gotten phone calls. Oh, I've heard that there's this down payment assistance option or this grant option. Do you offer that? Well, yeah, absolutely we do. Here, let me show you that. And let me also show you what it looks like without it. Sometimes there might be a little bit of a cost involved there that you did not think about. And maybe you have the ability to get a gift or a way of handling that down payment otherwise without the assistance that might save you a couple $1,000s. If I didn't take the time to tell you about that and you found out 5-10 years later, wait a second, yeah, I got $15,000 or $20,000 in down payment assistance, but I ended up paying $40,000 for it. Why didn't you tell me about that? Or why didn't you tell me that my interest rate would have been a point lower if I had taken advantage of this other option? And that's the difference between me and a lot of my counterparts. I'm going to, even if you're dead set on something, yeah, I can more than likely get that for you. But I'm also going to make sure that you know about other options so you can make an educated decision and be happy with it.
I'm glad you brought that up. I have countless clients that my cousin, they just got a home and they got a check at the table. They got money back, and I'm like, okay. Then I asked, do you know what interest rate they got? And they're like, no. And I'm like, do you know that the money that was given comes with a cost?
Right.
Because there's nothing free.
Right. I've yet to find a nonprofit builder, lender, mortgage broker, realtor. Everybody is in the business of making a profit in our industry. And because of that, there's rarely, if ever, going to be free money, right? Everything's going to come with some sort of cost, whether it be an increase in your interest rate, maybe the cost for that interest rate, a restriction on how you can maneuver for a certain amount of time, whether you can sell that home or refinance that mortgage within a certain time frame. You might have to buy in a certain area. These are details that you want to make sure that you fully understand before you get into something, dealing with the right people who are going to take the time to explain those things and not simply be your yes person. And say, yes, absolutely, we'll do that for you, no questions asked. And I would be very apprehensive of transactions that go that way because especially when we're dealing with such a huge investment like real estate, 5, 10, 15 years down the line, if you didn't get an inspection, if you didn't go over the details of your loan, it's going to come back and say, wait a second, I wasn't told about this. So Googles, do your research on who you're working with and make sure that you are getting all those questions answered. Yes, and that's what I strive for, informing my clients. If after letting them know that I can get you that down payment assistance, but the interest rate is going to be a point and a half higher, and they're okay with that, because that's going to increase their monthly payment, right? If they're fine with financing that into their loan, pay by all means. Yeah. But I don't want them to go, like you said, 2-3 years into their loan. Now they want to sell, but they didn't know that there was, what is it called? When they put a lien. Yes, yes. Some programs may have a requirement that says you need to stay in the home for 4 or 5 years, which again may not be a bad thing. Right. But if you don't know about it, and maybe something comes up and you did need to move or relocate, or maybe property values, like back in the height of COVID when they shot through the ceiling, maybe you decide, oh, this is wonderful, I've earned so much equity, now I want to sell my home. Then you realize you have this clause in your agreement that says you can't do that. These are important details that you need to know. Another big one I see all the time is builders have tons of great incentives, which depending on your plans, I'm not saying these are bad things, but a lot of times a builder is going to be handling entire communities. So they have the ability to manipulate these purchase prices by thousands of dollars. And the builder's lender, they're giving me $60,000 in incentives with an incredibly low interest rate. I'm like, wow, that's amazing. You got to understand the details in how that is able to happen. I've dealt with people that purchased a new build, and then for whatever reason, a year or two later, they need to sell, and they realize that they paid significantly more than what that home is now worth. Every scenario and situation is different. Most people that purchase a home are doing so with some sort of longevity in mind, right? Maybe it's 5, 10, 15. Maybe you decide that this is my forever home. But as we all know, things can kind of happen that might not have been planned for.
Right.
If you are fairly certain that you're going to be in a home for 10 or 15 years, maybe paying a little bit more for that home is not as big of a deal to you, because over time, as long as you didn't buy a money pit, that should balance out and possibly net a significant profit. But in a shorter term, that could make a huge difference, right? So if you're paying 60, 70, 100 grand over what properties in that area are typically selling for, you want to be aware of that information, because if, let's say you get a job transfer a year or two after that purchase, you might be underwater and be in a really bad situation. And those incentives and that interest rate sounded great at the time, but now you're dealing with a horrible reality check that has cost you quite a bit of money and heartache. So understand those things, and once you understand them, then you can make an informed decision, and it might still be a great deal.
I currently have a client. They bought their house in December, a new construction, new community. One of the family members, she got pregnant. She has a baby. They came from Florida. Now they're trying to move back. So they've only been in the house for like 6 months. They're still building, and they're trying to sell. So you know how that's gonna go, right? It's going to be tough because we're competing against the builder who has a lot of money, has deep pockets, and they have a lot of incentives.
It's so crucial to understand, and I could do a whole nother video about this topic, from people not understanding that the builder is not your friend.
No.
They might be very friendly. Builders representatives are very friendly. Right. Like, this is not a knock on builders. It's just there needs to be an awareness out there, because there's a very common misconception that you don't need a realtor when you're purchasing from a builder. And some builders, believe it or not, are infamous for, you might have a realtor. I've heard of and seen firsthand builders representatives pulling their potential buyers to the side and saying, hey, if you don't use your realtor, we can give you additional incentives that we would have otherwise, some shady, underhanded tactics. The best analogy I can give is most people, when they get a mortgage, it's going to be for a 30-year term. Right? If you're doing anything that is a 30-year commitment, make sure that you have as many people on your side as possible.
Oh, yes.
And I see it happen all the time where people go to a builder, they don't have a realtor representing them. They're dealing directly with the sales. Then they go with the builder's lender. And then guess what? The builder usually also owns a piece of the title company.
And then they go to their title office.
So let's go down this rabbit hole real quick. Hopefully everything goes right. That's the plan, right? But that's not always how it works out. So if something goes wrong, and let's say the builder drops the ball on something, who's going to inform you about that?
Nobody.
Do you think the builder's rep is going to say, hey, we made a huge mistake that's going to cost thousands of dollars. Let me go ahead and comp you that? Probably not.
Nope.
If you're dealing with their lender, do you think their lender's gonna make you aware of it? Unlikely. And they own the title company too. So to be fair, sometimes you're gonna have a great opportunity and option with the builders. There's plenty of great builders out there. But
completely agree.
Do your due diligence. I always recommend, when you are dealing with a builder, that before you sign anything, get updated comparisons and fee sheets, compare. If that lender is doing significantly better, I'm going to let you know, hey, I can't beat this. But if I can beat it, or even if it were the same,
Then,
based on the things that we've already mentioned, guess what? If I see the builder drop the ball, who do you think I'm calling first?
the realtor.
I'm letting y'all know about it. I'm saying, hey, there's an issue here and we need to figure it out.
Figure it out, yes.
Right? So even if it's the same, I would argue that having your own outside mortgage broker or lender is going to give you an advantage. You might be wondering, well, the builder's only offering their incentives if we go with their lender. Let's find out if that's true.
Right.
How do we find out?
Asking the builder?
I don't ask. I put it in I suggest that we put it in an offer.
Okay.
And my offer is saying I'm using my own lender and I still want those incentives.
Okay.
Then they can make the decision of whether or not they want a $400,000 transaction or not.
Right.
Now, guess what? The builder's usually going to tell you 9 out of 10 times.
Well,
oh, we don't do that. Okay. Well, we're going to go down the street to the other builder who said they are going to do it.
Yes, I've used that card.
and you'd be surprised. Sometimes it might take a couple days.
Yeah.
Sometimes it may. I've bought new build homes and I was a mortgage broker when I bought those homes, and guess who I used?
They approved mine. But
I used me. Sometimes it might be a middle ground, but I always tell people, you have already signed a contract or you've already given some type of commitment. And then you say, well, can I get those incentives if I use my own preferred lender? What do you think they're going to say? Of course not. No. You've already committed to me. Why would I give you more of my profits that I don't have to give you? But if you play hardball, just like the builder is, see, there's a misunderstanding of the golden rule. I'm not talking about the one in the good book.
Right.
I'm talking about the golden rule of real estate, which is he or she who holds the gold makes the rules.
That is true.
People think that the builder's holding the gold. But at the end of the day, there is no transaction without the buyer.
The buyer, yeah.
You hold the gold.
Especially right now in our
especially
market.
Right now, it's a buyer's market. You spent all this time getting approved. You spent all this time looking at houses. Why don't we spend a little time doing what we're supposed to do and negotiate? I'll never forget when I purchased my first car, I was scared and I went with my pops, my dad. He stopped me before we walked in to the dealership. I was ready. I think it was a Hyundai dealership. I had like, I don't know, $4 or $5 grand in cash. And to this day, I don't know if I've ever had that much cash in my hand. I was ready. I was ready to buy whatever car I could because I just wanted to have my own set of wheels. He stopped me and said, Eddie, we're not buying anything today. We're not signing anything today. He said, the real negotiation starts once we walk out.
Yes.
And that stuck with me. It stuck with me not only as a buyer, but as a broker, because it taught me to also understand that and put my best foot forward. Offer options, make sure that I lead with my best offer. There's no knock on used car salesmen. Unfortunately, they get a rap in the industry. It's not a used car sales tactic where I'm waiting for you to say no and then I've got this better offer in my pocket. Yeah. I'm leading with my best because I value your time. Right? Unfortunately, a lot of builders don't do that. They claim to not do certain things. Let's think about that logically. If we're talking about a $4, $5, $6, $7, $800,000 transaction, do you really believe that they would let 800 grand walk over 10 or 20 grand?
Oh, no.
I don't think so. That just doesn't make sense.
No.
So it boils down to who's going to flinch, right? And a lot of people take all that time to get approved. They take all the time to look at houses and they get exhausted. They get excited. I just want the house. And this sounds great. Why don't we just go with this? Why don't we try this first? Because if it could save you an additional 10 or 20 grand, why not give it a try? Now I'm going to give you a cliff notes. The builder's more than likely going to always have 3 other people interested in this home.
Oh yeah, they always do.
if you don't sign this now, this home might not be available. That might happen.
Right.
Very rarely does it happen, but yes, there is that possibility. Personally, when there's that much money on the table, I'm willing to risk it.
Oh yeah.
And I'm not just telling you this. I've done this multiple times on my own home purchases, I've never used a builder's lender. I'm a mortgage broker. I'm always going to get myself the best deal.
Right.
So guess what? I've always done this personally, and it's always worked out for me.
Okay.
It's not always going to be exactly what they offer with their in-house people.
Right.
But if I can give you a better loan and even get 50 or 75% of the incentives, that's still a win because it's a better loan. I'm closing a loan next week, new build, where we're not getting any incentives. We could have, but the person signed the contract before I got involved. We more than likely could have gotten some of those incentives. But even without the incentives, I still beat the socks off their in-house lender. So sometimes that can make all the difference in the world. But if I could sum it up, make sure that you get all your comparisons, do your homework, and always ask yourself, how are they able to do all these things? Right. And if you're okay with those answers, that's fine. I'm not here to tell you what to do. I don't mess with other people's money.
Right.
I simply want to make sure that you understand where those costs are, because nobody's giving you $60,000, $70,000, $80,000 out of the kindness of their heart. That money's coming from somewhere, and usually it's from your pocket.
Yes. You don't see it, but it is.
Right.
It's coming from your pocket. I think it's been very, very helpful. Today we've shared so much great information. I really appreciate your time.
It's always a pleasure talking with you and talk about constantly learning. I'm always learning. Hopefully I was able to provide something that would help. If you guys have any questions, please comment below, reach out to us.
My phone number is 832-671-0554.
And you guys can call or text me at 281-304-6353. Thank you so much for taking the time to watch, and we will catch you all in the next video.
Thank you so much.